Tomorrow's inflation data might just slam the brakes on your personal finances. With the Reserve Bank of Australia gearing up for a potentially game-changing interest rate hike, Australians are on edge. Why? The stakes couldn't be higher. Experts warn that if rates don't hit 5%, we could all be staring down the barrel of a very bad recession. Prime Minister Anthony Albanese is set to address the nation amid rising fears, and you know everyone is watching closely. The buzz around tomorrow's inflation figures is electric. Why? These numbers could dictate the RBA's next move, sending ripples through the Australian economy. The Commonwealth Bank isn't holding back either, with a grim prediction that has people scrambling. Are we ready for what's coming? That's where it gets juicy. Just last week, we learned that cash usage in Australia has plummeted by over 50% in the last 2 decades. Yet, in a surprising twist, cash payments have started to creep back into the picture since 2022, catching everyone off guard. What's behind this shift? The pandemic left its mark, and now, wallets are seeing a bit more green. But that's not the real shock. The current inflation climate is a nightmare for the RBA. They're caught in a tough spot, high inflation and weak growth. Tomorrow's data will be crucial for predicting whether another interest rate hike is on the horizon. And you can bet the markets are watching closely. Investors are on the edge of their seats, especially as they prepare for future decisions that could impact their wallets. As we sit here, the unemployment rate is holding steady at 4.3%. But with rising costs and the looming threat of a recession, how long can that stability last? The RBA knows they need to act, and fast. If they don't, experts warn that we might be looking at a downturn that could hit everyday Australians hard. Prime Minister Albanese's upcoming address is generating buzz for a reason. People are anxious about their financial futures. What will he say about the economic crisis? Will he have any solutions? The stakes are high, and responses from everyday Australians are rolling in. Everyone seems to have an opinion, and debates are heating up. And let's talk about the RBA's recent decision to axe card surcharges. This move could save consumers a whopping $1.6 billion. That's a game changer for those tired of paying extra just to use their debit or credit cards. But will that be enough to ease the growing fears about rising costs? That's the million-dollar question. As cash sees a slight resurgence, we are witnessing a fascinating change in how Australians handle their money. It's almost like a pendulum swing back to the tangible, a reaction against the digital-first approach that dominated during the pandemic. Is this a sign of a more cautious consumer? Or just a temporary blip? That's still up for debate, and you can bet the economists are all over it. Let's not forget the broader implications of inflation data. It's more than just numbers. It's about how those numbers will affect the average Aussie. Many are asking, what does this mean for my job, my savings, my mortgage? The anxiety is real. The RBA's next steps could either alleviate fears or send us into a tailspin. And people want answers, fast. As we approach the release of the inflation figures, the anticipation is palpable. Will they be high enough to justify another rate hike? The markets are bracing for impact. Investors are already positioning themselves, ready to react to whatever comes next. The stakes are sky high, and every little detail matters. Speaking of details, the Commonwealth Bank's recent forecast has people buzzing. They're predicting a tough road ahead, suggesting that if inflation doesn't stabilise, we could be in for a real economic shake-up. Their analysis has made headlines, and the financial community is dissecting every word. What will their next report reveal? In the backdrop of all this, we have the RBA's central banker's nightmare. They're faced with a conundrum: raise rates to combat inflation and risk choking off growth, or keep rates low and risk letting inflation spiral out of control. There's no easy answer, and the pressure is mounting. The future of cash in Australia is becoming a hot topic as well. With more people opting for digital payments, what does this mean for the cash economy? It's a changing landscape, and the implications could be profound. Will we see a return to cash as a primary form of payment, or is this just a temporary trend? As we dissect these economic indicators, it's clear that they're telling us a story about where we are headed. Consumer savings, spending habits, and overall economic health are all intertwined. The RBA's changes are more than just policy, they're impacting real lives. And let's not overlook the expert opinions flooding in. Economists are weighing in from all sides, each with their take on how to navigate this economic crisis. Some are optimistic, while others warn of the storm ahead. It's a cacophony of voices, and everyone seems to have a different piece of the puzzle. As we get closer to the RBA's announcement, the tension is building. Will they raise rates? Will inflation figures force their hand? The answers could send shockwaves through the economy and impact every Australian. So, what's the takeaway? The Reserve Bank of Australia is in a tight spot, and tomorrow's inflation data is the key to unlocking the next chapter. The stakes are high, and the consequences could ripple through the economy for years to come. If you enjoyed this story, subscribe. New stories every week.